Welcome to the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobby. Well, as you know, there's a trade war on right now between the US and China. And if you look at the US economy, you'd be forgiven for thinking they're the ones that are winning. Except the trade deficit is narrowing any. So as Donald Trump turns the screws even more, can the Chinese economy survive? Or are tough times ahead? That's today on the Debunking Economics podcast. Well, since Donald Trump started introducing tariffs on China, starting with steel and aluminium, but spreading more and more to other things, the Chinese currency has fallen over 12% against the US dollar. The US dollar, meanwhile, has been careering to multi-year highs. The Chinese Renminbi fleetingly hitting lows that it saw in 2006, but only very briefly. By and large, it's always been a lot higher than it is now. So, Steve, first of all, this will be very upsetting for Donald Trump, of course, because a low Chinese yuan makes their exports cheaper, 12% cheaper, it would seem, which means a 10% tariff on imports is going to be largely ineffective.
Absolutely. And this is one of the hassles about when you're trying to manipulate something other than a real estate bubble in your hometown. There's plenty of feedbacks that exist in this complex world he's finding himself in now that didn't exist in New York. And they can undo his plans.
But it's not good for China, is it, really? I mean, apart from the fact, okay, yes, they can export stuff. He'll just put the tariffs up even more. And we are going to see it raised to almost certainly 25% from next year. But China doesn't want a low one either because, I mean, they've got lots of companies that have got debt in US dollars. So yuan is pushing up their servicing costs, which I think is why we're seeing the stock exchange, the Shanghai Composite, which has really plummeted this year, 23% down. So, I mean, that's a bad side effect for them.
Oh, yeah, there's plenty of good and bad side effects overall. But, I mean, China, this to some extent what's happening now is a sign of China's success in the last 25 years because who would have even, can you imagine the thought of somebody declaring they're going to put tariffs up on China in 1990? I mean, forget it. Yeah. It wasn't even an economy worth discussing in terms of the scale of it.
It's a sign of their success, isn't it? That's for sure. But
absolutely.
I mean, but they're not. But they're doing it all with their own money now because the stock exchange has started to tank. I mean, foreign investors are bailing out. It's largely local money. That's not going to be too healthy, is it?
Well, that's actually the standard thing. What they've successfully done is harness. They've done two things. They've very successfully harnessed foreign money when it came to building the free trade zones and to bringing in foreign machinery and foreign technology, so they had decent products to export rather than the crap they were making before the end of Mao and her friends, and Mao himself for that matter. So they did very well out of that, but they've also pretty much just harnessed the local capacity to create money. So it's a combination of the two. And I think to some extent, if you're pulling out the capacity to bring in foreign money, buying foreign machinery, which is the main reason you'd actually want to bring foreign money in the first place, then China's dependence upon that has dropped dramatically. They need some agricultural exports. I haven't actually checked that. I might take a look while we talk and look at what China's imports are. But fundamentally,
well, obviously, iron ore is a big chunk as well. They need raw materials. Which is why Australia's been doing so well out of them.
Yeah, but there's also the fact that the machinery imports are extremely important for them when they first started operating because they literally. The local technology was just garbage. I mean, I'm speaking from having seen it because I went to China in 1981-82 and was taken on a tour of a range of different factories to see what China was producing at the time. They were attempting to do a bit of a sell job for the transition that Deng Xiaoping was trying to push through, but it was absolutely juvenile. If I have a look at the factories, for example, we're taken to factories making light bulbs, and I can't remember if there was actually hand wiring going on, but it wasn't far from that.
Right.
Now it's incredibly sophisticated, and
I guess, I mean, they're bringing in those foreign machines. They only need to get them once. And this, of course, is where Donald Trump again gets upset. They only need to get them once to be able to copy them and produce them themselves.
I'm looking at the brilliant resource. I recommend everybody to take a look at the Atlas of Economic Complexity put out by data scientists in Harvard University, not the economists, I might emphasize. And if you look at China's imports, Guess what its biggest import was?
What year were we talking about? Sorry, back in
now 2016.
Its biggest import. It's not so not iron ore.
No, travel. In other words, and then when you classify travel and tourism as an import, what it means is your Chinese tourists are going overseas. So that's 13% of China's imports. And then you get electronic circuits making up about 10%, which you could expect because they can't yet manufacture, and it looks like won't be able to manufacture for some substantial time, truly advanced ICs.
But that is a sign of an economy doing well, where tourism, people traveling overseas is your biggest import. They've got that disposable income to be able to do that.
Yeah, and let's go back to 1995, which is the earliest which they have data to see what they're importing back then. Okay, and no sign of tourism, transport. ICT were the biggest thing. You had basically machinery, huge imports of machinery, like machinery not otherwise classified as 1.5% of their imports. Parts for office machines, 1.25%. Machinery for working rubber and plastics, 0.75. Computers, 0.73. Then a whole mass of others. It looks like it adds up to about 15-20% of their imports.
But that was then, and that was then. Now,
this is now. This is now. But you look at now. They're really what they're importing. Fundamentally, apart from the tourism side of things, they're importing what they need to make devices they export to the rest of the world.
But they're doing that with debt. So we've got Chinese debt of 36 trillion yuan, which is about $5 trillion, I think. And then we've got another 40 billion yuan in local government debt as well, as far as we can tell.
I'm presuming a trillion there.
Yeah, a bit of trillion, sorry. That's right. Yeah. I mean, they keep on issuing this debt. More bonds are issued. I mean, maybe they are bought by the People's Bank of China, so there's more yuan in circulation. But that would be contributing to the devaluation of the yuan, wouldn't it, as well? If there's so much money, and is that part of the problem, that they are funding so much of this through their own government and just pumping more money to stimulate the economy?
Well, there's a combination.
Massive QE, in other words.
Yeah, but the thing is, QE, when you're directed at the actual physical economy, can mobilize that economy, and that's what we're seeing at the moment. I mean, this comes down to how has China been effective? What have been the main factors? And without a doubt, a huge factor was importing foreign technology back in the early days of the industrialization process. But what made that more successful than just importing this stuff is it was done deliberately with the intention of learning how to make the same stuff themselves over time. So they got their massive technology transfer. And they also required American companies that took advantage of the incredibly cheap wages that applied back then. They had to have a Chinese partner, and within 5 years, the Chinese partner had to own half the business. So they've created their own industrial class as well. And that means that the skill set they managed to import by bringing in the machinery and training the workers up on the machinery now means that they also have the factories and the technological and institutional capability to make this stuff themselves. And I'll just actually give another bit of a quick summary of that thing about imports of China over time versus what they are now. In 1995, when you look at the one-digit level, 19% of their imports were machinery. Come forward to 2016, 12%. It's fallen a bit. But now the most important by far is electronics, which means they're importing all the components for making computers, 20%. Services, 23%. That's where tourism turns up. Minerals, which I would have thought would be larger too, is 13%. And you add in vegetables, foodstuffs, and so on, that it brings up to about 20% in raw materials. So it's been a huge transformation in their capacity to produce this stuff. Right. So when you start putting
but are they producing this stuff for export markets? Because then that raises the question. So it's looking more likely than not that we will get to the end of this year. Donald Trump will get jack of it and will say, yep, we are going to push ahead. And the threat is 25% tariff on everything that comes out of China. And then he's going to get annoyed about anybody who tries to subvert that by sort of dealing with China and then passing on. He's going to try and stamp that out as well. This man has got a mindset that he's got to stop this balance of trade deficit with China, which is a big, it's a big ask. He's going to do what he has too. And so far, the US dollar is booming on this. The Chinese yuan is down, and more to the point, as I said, the stock market in China is nosediving, 23% down this year.
Yeah, I think it's serious challenges for China, but I think, as it's been saying in the conversation, a lot of this is backfiring on America as well. And if you look at like the electronics, let's look at their exports for a moment at the same level of detail. I mentioned their imports were 20% electronics, their exports were 26% electronics. In other words, they're taking in the stuff and re-exporting, and of course their export volumes are far bigger than their import volumes. So in 2016, their export volumes were 2.5 trillion. Their imports were 1.9 trillion. So the percentages are even more exaggerated. That's their trade surplus.
But I'm sure Donald Trump would look at that, for example, and say, yeah, well, a lot of this component manufacturing in electronics can be automated. You know, it can be, let's just provide grants for people to set up those factories in the United States, and let's just take that business away from China.
Well, that's partly, I mean, again, that's partly of a modern trend when you have the increase in 3D printing and machine controlled systems, computer, robots and so on. But the thing is, to actually manage that, you've got to have a skilled workforce in the very first instance to install the stuff. And that's where America, by having done this, effectively pact with the Chinese devil, reversing the old white. I was once called a white devil, by the way, which is a very, very funny experience in a Chinese theatre in Sydney, when my companion spoke fluent Chinese. I'll tell you the story later. But anyway, so the Chinese devil, the pact they've made meant that they got dramatically lower wage costs. This is the American capitalists. They did very nicely out of sacking American workers and hiring Chinese ones instead. Huge advantage in those days.
Yeah.
But what that meant was the Chinese workers got skilled up over time. And again, that come back to the comment, I think, from Scully. Apple, was it Apple's boss called Scully? I keep on forgetting who runs the company. But he said that if he held a meeting of machine tool experts in America, he could hold it in a boardroom. If he held the same meeting in China, he'd need a stadium. And that's part of the problem. If you're going to do this thing,
well,
trying to bring them
pay them well, pay them well to come over from China into America, and it's largely automated these days. You don't need as many people. Presumably, that Chinese advantage.
You don't, but you still need to. You still need people and actually know how to put the machines together. How to actually build the factory. You've got to. There's a lot of once you get the machines running properly, then it's very, very smooth. But before you do that, you need a hell of a lot of skilled labor. And this is actually Elon Musk has discovered this the hard way by trying to over automate his factories for Tesla. He's now realized he went too far in that direction. He should have relied more upon labor. Skilled labor in the early stages. Now, the thing is, China can do that on a scale America cannot. So Trump might think that might be the way around it and bring back with the mechanization and so on. It's a lot harder to do that than it is to already have that industrial base and be able to build on it.
And how important is the value of the yuan in all of this, and and how far is it being controlled? I mean, it's controlled to the extent that the authorities say, well, it can only move within a very limited band on a per day basis, a 2% band basically. So they can say, it moves freely but with constraints, which seems like a sensible policy to me. Are they doing more than that? Because certainly that's the belief, isn't it, by the Trump administration, that they are currency manipulators.
Well, they are in one fundamental sense, and that is that they're not letting the money created by the exports of Chinese companies to the rest of the world to end up in the Chinese monetary system as much as it would if they weren't sterilizing it by buying American bonds. Yeah. So what you get the Chinese corporations export to America, earn American dollars in return, tender the American dollars to the central bank, get Chinese yuan back in their accounts. But rather than the money which turns up in the Chinese, the American dollars are then used to buy American bonds, which comes back and means you've got a demand for American dollars as well as a supply of American dollars, and therefore the American, it doesn't change all that much. It doesn't change the relativity between itself and the yuan.
Right. So give that to me again. So why? So you're doing business in America, you get paid in American dollars, and rather than repatriating that back to China, you're using it to buy bonds in America. Almost as a form of hedging. So that
what it means is you're not going to see the American dollar falling as much as it would. Therefore, therefore the yuan rising. So
they're manipulating the US currency more than manipulating their own, in a way.
Fundamentally. And that's what people worried about China being able to sell other bonds and flatten the American economy. Not a problem, because the American government has this thing that produces American dollars called the Federal Reserve. Yeah. So there's no problem for them in America being able to absorb its own bonds. But a large part of what China's been doing is sterilizing the impact this would have on the yuan American relativity.
Well, they can't anyway. I mean, if they started selling those bonds, then those bonds would start. I mean, the American dollar would start to dive. The bonds would lose value before they sold them. So, I mean, they'd be buying them for less and less, unless they can simultaneously buy everything in 1 second, which you can't do. So,
no, the same sort of band control that applies at the Federal Reserve. They want to keep the interest rate in a controlled band, and they'd be buying those bonds to avoid. If China was selling, it'd be the Federal Reserve buying. So, there's no easy capacity for the Chinese to hit the American interest rates.
Right.
But they have avoided the export sales driving up the yuan as much as it would have done if they weren't trying to sterilize it at the same time.
Well, there we are. We've given you a big sample of that conversation. It actually goes on for another 15 minutes or so. If you want to hear it in full, then you need to subscribe to the Debunking Economics podcast. And you can do that by going to debunkingeconomics.com and choosing one of the subscription plans on the right-hand side, or become a supporter of Steve Keen on Patreon. Go to patreon.com/Prof. Steve Keen. And if you pledge $10 or more support to Steve's work each month, then you get access to this and all the other podcasts in this series. Hopefully you'll do that. We'll see you back here again very soon. I'm Phil Dobbie. Thanks for listening.